Okay, so I want to look at the Dow to the yen on the monthlies, and they went to negative interest rates over there. So here's a fundamental situation where all the fundamental traders will say, "Well, it's going down." You see, and I understand people want to know the reason why a market goes the way it goes, but I don't know if it really matters in the end. So I'm focusing today on the color background as being a psychological kind of, going out and get a new pair of clothes for free answer to life. And if you go to custom here, you can pick backgrounds that may be more soothing to the brain. I have to pick, if I'm going to go white up, black down, I don't have a choice here as far as some of these are going to clash. And if I have a yellow for my closing prices, that's might be a problem too. So I want to go with something kind of neutral and kind of just a higher brightness. I don't get too carried away here. Actually, it looks very, and Windows has never fixed this. This is forever. This has been the worst. Like, it doesn't remember, right? It just doesn't auto remember. Windows has got to be the worst. That's totally not the color I picked, is it? See, now this color is ridiculous, but it's about brightness. Oh, it went to white. It didn't even save my custom color. So your Windows, okay, I want that color. Okay, it's a little bit better, but and the size of these 100 pip handles is another issue. How many pips are you trying to make? And since I'm on, and we closed right at the round number, so it's kind of a round number game. It goes up, it goes down. And for whatever reason, an arbitrary moving average at a 100 period moving average right now on the screen is kind of just like, it's just like if you threw paint on the wall and called it art, right? So it's not helping you make any money right now. So I'm a little impatient. I can't take it, right? I cannot take waiting for these setups. And sure, so here was a double top, right? You could have sold this thing in the summertime. Now, this big sell-off here, is this supposed to be, I mean, this is almost conspiratorial kind of nonsense. Is that supposed to be, well, the banks knew there, that's why they you can go back and you can make up a story for every candlestick pattern here. It's just about how many pips you're going to risk and how many pips you're trying to make in how short a period of time. That's all that matters. So you can place sleeper sell orders down at the bottom here that are just guaranteed scalps, right? Here's the 100 pip monthly. For God's sakes. There's a 100 pip window right here. Where do you think these robots got their stops? Or people? People are just trading mechanically, like every wick on here, right? Here's the double bottom. Forget the wicks. This is a double bottom becomes a top over on the rollover. And where does the rollover happen? As you come up in, now RSI is giving you divergence up here. Obviously, right? This is a classic failure swing to match this projection of the bulls. And these are so many pips. It's insane. So what's the next trade? Obviously, buy low. All day long, buy low, buy here. The shaved candle top. We could come all the way back to here. This would be a Stapleton setup. You're going to have to wait for this to come all the way down to here. To ricochet maybe 200 pips with a 50 pip stop. But it's about putting all those orders in. Who wants to spend that time? If you want to sit there, you want to put a 25K on over 25 1K orders peppered all the way down to China. But when you hit this button for this massive swing scalp, it's a combo plate, right? It's going to look like this, combo plate. So your first order is going to be buy on a limit here. Obviously. Then buy every 100 pips. So you're risking about, $30? Next order bank comes in. And it's more aggressive. It's going to buy here like this for the next 4 hours. There's a 4-hour bank iceberg sitting down there. It's waiting to get tagged and bagged. Scalps. Maybe it stopped out of, say you put this order bank in and you didn't count on the fact that they may have to come all the way back to here, but you know this is going to be the trimming area. So we've already dipped in the well. And some people are going to go along because they're like, well, you know, fundamentally, they want negative interest rates. Well, you know, I don't know if it's any more than the fact that everybody took notice, all the candle traders took notice of that doji, or just the market's letting you know it's dead in the water. It made a triangle, and here's the scalp. You have sell limits on the edge. I'll never forget the first video I saw 7 years ago. FXCM, the guy does a video, goes, well, just put your buys down here and your sells up there. And I'm like, really? That's that easy? And I'm like, sure enough. Support is support. And amazingly, resistance is resistance. Support, you scalp to here. Next week, wow, you know, if you really start to come back in here, so what's going to happen? Are we going to come back in here, wash this out, and then go higher? And then people are going to say, yeah, all that money they printed finally kicked in. It's ridiculous. To trade fundamentally, it's much better to look for a double top. First change in trend. I just watched another video. This guy is like, he drags you for half an hour. How he's going to tell you how to find a change in trend. Okay, his video only needs to be, everybody likes to just go on, right? I'm doing videos. Everybody likes to just babble, right? But if I had to, if you put a gun to my head, you know, at the close of this hanging man, or what do you want to call it, when this bar closed down and you got this major hammer, or people call it the pin bar, you have no choice. You have no choice here but to, I just got attacked here. Right here, you have no choice but to admit that that is not making it higher on close. So that's your first fractal. Now you highlight that, and then you hit hold down the control key and drag that over to the last known high. This should be your inflection point to swing the other way. Then, as this thing's topping out, if you have RSI running right now, you know this is divergence, cause this pullback, and this is a failure swing, and maybe this is a negative reversal. So you're going to project off of that, and it's gonna be a like this price pulse here. You know that exists. So find the lowest low inside this. That should be where they would take it. And I'm not saying, you know, these trades are really Stapleton trades. You have to have patience of a turtle to be a turtle trader. So I'm definitely not going to be a turtle trader anytime soon. And I just want to get my money, get the hell out. They can have all their fun, but when we close down here and give you this big black candle, it actually opened and engulfed that whole thing, right? Some people put buy stops here. Now, there's the other way to get in, which is a little bit, I think you should do stops, limits, and some at the market just to cure the itch to trade something. Certainly on dojis, I'd say hedge it at the market. Hedge it at the market, these guys. This stuff, oh man, you know, you want to have this capture, you need to be selling up in the air. And you just have to, you know, a big month up, just sell it. Even if you're wrong, right? You sell it here, oh, you stop you out, you sell it here. Oh, you know, I made some back. Sell, buy. If it's up, you're selling, and if it's down, it's a total inversion. Now, there are times when you just want it to get quiet and then just keep going in the direction of the original flow. So I guess people are supposed to be buying the dollar now, according to fundamental analysis, right? And would they buy it now or they buy it on Wednesday? So that's the whole question. It wouldn't matter if in the end this thing actually the dollar did go up against the yen, and the yen ended up at 150 or some ungodly number. This is going to take for a long time. And this is a monthly chart. First, we got to get to where the scalpers are going to dump what they just bought here. That's the next stage of the game. So it's a chess game, right? I mean, you make a move, I make a move. Of course, you can't intimidate the market, right? You can't make a move like this computer did. This guy played, the Russian chess player played Big Blue, and he did a move. He opened with a move that's never been done. Just a dumb move like a child would do. You ever play tennis? You ever play chess with a kid that's never played before? And you're like, okay, well, you know, it screws up your whole game. You're expecting people to come at you at a certain level. So there's this obvious support, triple touch on close, but not on wicks. No wicks involved here. This is an RSI trade. If you run RSI, which you'll see that this pullback here is a buy because it's more oversold. This is a deeper pullback at a higher price than this price. So it's holding in a narrow drift channel, typically the top. This is a topping pattern. So sure, we could come all the way back to the starting gate. This would be a Stapleton trade where you're going to have to staple yourself to some kind of patient, you're going to get some drugs so you can be on heroin for the next, to get filled here for the bounce to here, right? You're going to have to be in a coma maybe. Put yourself in a self-induced coma. So now the zoom out here, you're like, oh, okay. But wow, you know, so was this not the big trap here? If you have your first sell limit is on this. Okay, you took 200 pips of heat to make what? 800 pips? Okay, I would take that risk, but why would you? There's plenty of time to make. This is this is 4 months of trading, right? Just keep on failing into that wick. So what's the trade now? Well, just keep failing into any wick, right? So you're always at the edge. And certainly you could come back here and do all these like, oh, it matches this. Yeah, of course, these are popular prices. Here's the big breakout. Like, when you see this happen, like this trend line's broke. Actually, there's a break here where it fails, but that's actually the rollover carried through to here where we get the top become a bottom right there. So yeah, this thing's definitely going to display all these patterns, but what phase is it in now? It's getting choppy, just like so. If you're a trend trader, what do you do about markets like this? Goes nuts sideways. Just mark that off, right? There's a double bottom there. It's where they trap underneath. So this is where they're trapping, right? There's a triple top inside that bottom in close. Not in wick, but just there's 1, 2, 3. You can count this stuff. This is Elliott wave. This is the closing price. This is the wave of the market. It's the wave. That's not this wick thing. I don't get how these people are doing that. You can't draw trend lines and wicks. It doesn't work. There is no averaging of price. The wick is a momentary snapshot. It's not a film. Even the people using the 2-period moving average, which I would never go that lagged out, they're still looking at average price. This is actually a month's worth of price. This thing goes sideways for a month here, a top bottom on the monthly after it rejects this. Oh my God, bet the ranch, right? Just call everybody you know and just tell them, well, we did fill this hole here. Just tell your neighbor, get out a crayon. Look the way we filled this hole, and I love these look backs people do. They do these look backs to confirm that, yeah, you know what? When something goes up for too long, it actually goes down. And it forms a big crater. So the crater's here, right? We satisfied that crater. Okay, we got it. Same thing in the CAD, right? CAD kind of a little overextended. That's 2007. Are you kidding me? So that's the monster kind of scalpish. You see this on a 1-hour chart. Oh my God. You got sell limits up there. You're like, oh yeah, these guys are going to get their house clean too. So this is the same thing that happens when the news comes out. And I guess, you can make arguments for, well, what's going on? I'd like to see the headlines here. In the middle of this year, give me the headlines. I'm going to guarantee you it was like, the headlines here must have been, they're going to hell. Now, all you have to do is just find the last low on the chart before this sell-off and just look forward. And I would love to boot up the headlines here and hear what the commentators are saying. Now, here it's mind-blowing, right? You come in, and this is the kind of, you see this wick here, right? These monster wicks. I could just imagine, pick any wick on here that's like here's a psycho wick. And here was the Bank of Japan right here said, you know what? They made a decision right here. And if you look back, you'd see it. I traded that. I was buying bounces along this whole crush, right? About here, I'm trading pretty much this whole thing and getting annihilated, right? I'm buying this because I'm like, there's bounces in here, right? There's scalps in here. I'm like, why in the hell? Like, really? And oh my God, when it got so quiet down here, and this is the classic setup, this is probably the best example of two countries that are so far apart. Like, at least with Europe and I don't think there's more of a wider, I was watching this Jarrett Davis, and he said, pick two countries had the most controversial relationship. Well, this is ridiculous. These Japanese people, I mean, they're just ninja, punishing on this sell-off. You can't even believe this sell-off, actually. You go into the just the simple monthly trendline analysis, just exercise in a market rollover. Come to this swing low here and take that off of this top. That's another thing in the future that actually just on this sell-off, that's the setup, right? You have your limits on this pivot. They come up and they actually trap the bulls on that wick, and they pull it back and they come all the way down. Mind-blowing. Here is the last known top bottom. It doesn't get any better than this, right? A real sharp wedge. These two wedges. Meanwhile, this whole vapor thing's forming. Once they satisfy this, here they come for the pullback, and they got to trap the guy that's like, oh boy, it's gonna. That's where those wicks are just trap zones. Pretty much, you want to get in that trap, but the trap is not this wick; it's that baby wick that just like, see, thought we were gonna go lower, did you? And then, oh boy, the other way. So, that happens on the 5-minute chart if you don't have patience for this setup. But, this is like the news on a 1-minute chart. That same kind of just, you can't even believe, like, when they went here, it's like, what? So that's at 80 cents or so. That's crazy. So that's 5 years ago. So it's crazy. Now, for the short term, it's always going to be the scalp. But look at this thing coming back into this space, and here's the doji looking forward. If you see this monster doji here on the monthly, which is confluent with this range here, so carry this forward. Yeah, obviously, come down easily another 200 pips, and the buy limits are sitting here, and your exit's here, or maybe your exit's here. But it's just about putting these orders in. This thing has a big order bank here. And then, of course, it's probably not going to fill. But imagine it ever came back to here at this doji. Who's not buying that for a 200 pip bounce? Or maybe it's going to come all the way back to here. Maybe it goes into a range mode, right? So it's a lot of maybe. And then, so you go for the smallest time frame that you can afford. Now, here is the doji entries, and this is going to either be hand placed, but when the market gets quiet like this and you get the same pattern that you just saw there, which is a failure on close for the market to make a new high into the projected bull targets, which would obviously be another tag on this line. All of these you can find any tops and connect them. You're done. Your charting day's over. There's not a lot of setups in the monthly, but look how this was supposed to be the breakout, pull back to previous, failure. So it's a doji. As soon as it stalls out up here, you have your first hanging man. You need to have a hanging man plan. You know, the thing is that do you ride this for all of these hours? So the obvious place that people took profits, if they sold up here, was about 250 pips south into this last known major, and a lot of people bought there. Now, they bought there because they're like, oh, that's support, and then they probably bought even 100 pips deeper. People had buy limits there. But notice how the bottom, the double bottom here, became resistance right on the clock, right on the 4-hour button. So the last entry had to be, you were long on scalps here, just because you had limits here that got tagged. Now, you know where to put the order on a 4-hour chart. You just have to go through every 4-hour chart and mark off the last known zigzag. That's about how the system runs. And I guess you have to think about it a little bit. I don't know if a robot's going to come and see this little subtle doji hammer and put and bracket the like top became a bottom, which is this whole party started on the 4-hour yen. So you're always looking at the market to return to the scene of the crime, and these are at least 50 pip scalps, right? 20 pip scalps. I mean, this doji here, that's 100 pips, right? With about a 20 pip stop. But you had this line drawn in advance. So you had this one drawn, and you also had buy limits here. Maybe they stopped you out on that. You had buy limits here, maybe stopped you on that. But you have a tight stop, right? They blow through it. You definitely have buy limits at the beyond the wicks. So everything from here, and this was the doji here. So maybe you scalped that. But, you know, you have to trade both directions, right? If you're still short from this top, another thing is on the 4-hour dollar yen, this kind of thing. This is the double top. The last known swing high, you draw your trend line off of that. Wow. So if you're really aggressively selling this, you're going to have sells on this doji and this inverted hammer. So anytime you have a small body, you're going to have to hit a buy stop and a sell stop. So this is your lowest risk entry as the market stalls out and then continues. Boom. The market typically stalls out at the end of the whole session of the whatever happened during that session. So that's like the retracement. The market comes crawling back from a huge sell-off, or it drifts either way. And then sometimes it'll drift, and then it'll just like spill into a zone because, well, you know what? There's nothing there but protection orders, and it's going to start filling that thing up. So now I'm like, I can't really think about the British pound when I'm looking at the yen, and here you have to go with what you see. Certainly the scalpers had a field day putting all their limits in here for the, low, just a staggering amount of orders. You can't see it on here, but if you're going to trade, say, a mini spread over 10 orders, you're going to actually have it, it would look like, say, your first order's here, then here, then here, then here, then here. So you have your orders are going to look more like actually where these pivots are. Then you're just going to buy here, and you're going to buy here, and your exit's going to be here, and your stop's going to be here. But there's going to be a whole bank, right? A crop of orders. You put a whole mini lot down here. And should you get this kind of action where you bought here all the way down, it's about getting in front in a logarithmic kind of placement. So your orders look like let me back to this. I'll just get rid of what's there, and just it wouldn't matter, right? These are gonna look fine, as good as a 200-day moving average in reality. So if you just think about right now what the order would be coming into Sunday night, it's just going to be buy limit, buy limit, buy limit. You don't know how far they push it, and you don't care because this buy limit has a stop here to take this much. And this one has a stop here to take this much. So if they take it out like a zipper, who cares? Now, if you have 3 orders here in a pack with a master stop and then terraced out, you basically have these zones of buy, scalp, retrace, and if the order banks say when you drop it, all your buy limits are sitting in this pocket. Maybe you pick a master stop connected to all these orders, then the take profits are going to look like this. This will be your best trade, and as you come out here's the dense pack of limits. Here's the master stop connected to this order bank, and the take profits. Each one of these is going to be, there's got to be a scalp in there, for God's sakes, in case you're wrong. You got to pay for some of these strategies. There's a cost involved in every, but if your take profits look like this, and of course, you could always pick Fibonacci numbers for this, where maybe this is at 21 pips away from here, and this is at 13 pips away, and this is 8 pips away, 5, 3, 2, 1. You're just looking to make that. You could have a Fibonacci bank, right? So if you just wrote a script that said buy 50 pips deep, but I want you to buy at the 34 deep, right? So 34 is your first fib. Buy limit is minus 34 pips. And the market's trading up here. So it's going to buy here. Then it's going to buy at the 13 or the 21 handle. 21 pips deep. And when you get to I'm doing the distance from 0 being the stop. So if your stop's 0, it minus, say, 5, which is like a 3 pip stop on this, depending what your spread is. So maybe you have to have 8. Your last order is to buy 8. With a 8, it's going to be a 10 pip stop in the end, because there's going to be a spread, or maybe the news came out. So let's say you're buying your order drop is this is support, and you're going to give this thing about 4-hour iceberg order, right? Maybe 8 hours. You're sitting out here, and so here's your minus 34, your minus 21, your minus 13, your minus 8, and your minus 5, but you're not going to trade that. But your stop's at minus 0. So you've got a spot down here, but it's about having it look. So everybody talks about this Fibonacci. Well, you have to, since you're dragging your fib tool all over your screen, you might as well place your orders on that damn fib thing. That's why, the idea that it's just going to stop at this one thing because you have this thing, and it's like, well, look. Yeah, I know you bought here, but what the hell? I mean, this is brutality to anybody that has a stop here. You're not even... You always have to be scalping. I don't know how these people caught the cake. I guess that's why they're selling all their webinars. Top became a double bottom. Ding, God knows where the hell. I mean, you don't even know what's coming next. Of course, if you look, you're like, well, we're probably going through monthly or something up there. Anyways, this idea of, martingale or just pure grid trading would just, a linear grid is not good. It's, if you're eager to get into trade, I guess you could drop linear grids. I'll buy every 20 pips. Here's another approach. I'll draw every 20 pips with a master stop. There's one approach. The other one is I will buy here and here, and this one has a stop that goes here, and this one has a stop and the profit's here. Here's your entry. Take profit, your stop. The thing here is that, this is really low risk. They blow that out. It goes into free fall. Market picks up this order. Shebang. It makes back what it lost here. That's why these ratios need to be pretty sky high on that. That's just a 2-order placement without going into psycho order placements. And you can blow up an account real easy just by putting in too many buy limits. And if you put in a stop, like when I used to swing trade, I had a stop here. And we come into this whole thing. And some of these are scalps. So all the market has to do is come into this trap of, I'm talking about 60, 70 orders. You open a demo where they let you place unlimited orders. You test that demo and you tell me what you think. Market comes down like into that order bank. It's scalped out already, but it's got profits that are in like unbelievable territory. You press one button, you drop 20 orders. Double click. You got a tablet, a Windows tablet. You load MetaTrader. You double click a script on that. MT4. It just launched 63 orders. Spread out. You don't care where these markets go. You cannot care where these markets go. If this does not fill, you just wasted double clicking that script. Now this could be a 15-minute script, or this could be 3 hours or 5 weeks. I don't think there's a point in putting 5-week orders out there. So when you go and you trade the market, anytime you step up to your computer and the market happens to be open, okay, this is where you think you got to trade it. Like if you got the time, right? If you have a day job, you don't care. You just lay this big strategy out there, and harmonically speaking, you want to place these orders like in some type of array that is staggered, like clusters, because there's going to be hotspots in here. Now, you may not fill on these. It's totally, if you don't fill on those, if you realize the market's going the other way, there's an aha moment, I think, for all the time frames where everybody's like, And so on the daily, still in the dollar yen here, you can see that a lot of the people that like to sell high, this is an extremely huge rally. So you had to just have your sell limits already at this, where they're going to trim the trees up here. And it falls in that doji. So that was obvious, right? And if you wanted to get in aggressively because you could see it coming, you want to sell that first. This is about 100 pips of heat up here. And when they come down here, people buy into this. So obviously, we still could bounce 50 pips next week. We could also go down 50 pips. So I say go to the 1 hour. Put a buy stop in. That looks like the obvious trade here, right? We're still going up. We got our first top bottom. Big hammer here. We could retest this whole wick. So I have a buy stop here. It's like a chess game. You don't have a choice, right? If you're going to go with the volatility breakout rules, which say anytime the market goes sideways, I'll put a buy stop. So put a buy stop, and just so you don't, you're not wrong, right? You go either way. You put a sell stop. Next order is going to be sell stops up, a bunch of sell limits up at this last node triangle cluster on the big round number. Like I said, this is trading's for dumb people. So if you got half a brain, you're probably losing money. Here is the triangle. right? Apex right on the 100, go figure. And all the, this is like an inverted, I guess it's not showing up on here. This is if you're a candle trader, you need to just trade each candle. You can't look out like the compressed candle charts. I guess the reason I get all angry about candle charts is because when people compress them out like this, it's like, well, it's not, you don't need candles when you're looking at it like this. So the candle tells us such a big story that you don't want to. Any candle trader book you look at, they just have like 3 candles, So you got to focus, and then they'll say, "Oh, well, this candle pattern doesn't work." You just, anytime it's baby candles. This is a baby candle because the body is so small that it just happened to close at that. You have to take into account in that 1 hour session, it just happened to close there. So if you did a 2 hour chart, this would be it'd be a hammer or a doji with a big wick on the bottom there, because all it did was come back up. That's why the closing line shows you that, it may have opened up and engulfed that thing, but unless you bought down there, it's that's why you have to buy when it goes down. So there's a prime example. Buy, and then just sit. This is how big are you buying into that smash. So here was the rollover point on the 1 hour. So this thing is about this is a livable pace of life here. Retest, it becomes this hammer. You put in your sell stops right at the close of that or sell at the market. Anytime you see a hammer doji, sell at the market, buy at the market. Just hedge it. Just go either way. So here, you'd say, oh, well, I'm getting chopped to death. But at some point, it's going to pay off because whatever you're in here, as you accumulate this, it's going to unwind in here. And as long as your ratios are 4-to-1, 3-to-1, 2-to-1 or better, 3-to-1, 4-to-1, 5-to-1 is what you're looking for on all your orders. Because when the market spikes down here, how many pips that is? It's probably about 50 pips here. Yeah, easily. So your 100 pips is 50 pips smash down. As long as your orders have tight stops, yeah, they'll take you out of some of these, but you got to be buying on limits just beyond, right? And so it's all about how you create these arrays. The fib tool here. So here's I turn my fib tool into a risk gauge, right? So you're always like, okay, where are you going to get out? Now you have to place multiple orders like this. Where are you going to get out? So this would have been a great trade, right? Which trader would have been a great trade? And if you had them all like this, so maybe you had 3 in here, but your entry, say, is right at the wick, right? That's too tight a stop. But then you have another order after this one's gets stopped out. You don't place another order. You let the account go into 0 margin usage. So if you mark this as your last stop, right, for this, you're just going to build a 2-order bank. But your profit is up in here. It would have been a great trade, but your stop was too tight. So if you drag this down and let it go into free fall and don't fill for another X handles, like leave a gap, this one would have filled, right? If you have imagine you've got 1, 2, 3, 4, 5, and you got orders all the way down here that never filled. So you have a whole array on that strategy. The one that filled here, very tight stop. They all made money. They were out of that trade. All you have to do is take this up to add 5 more pips to your stop and keep the same ratio. I think it's double your money here or something. It's like maybe double or triple. As soon as you do that, you see that order made money. And if you take this profit all the way to above here, the same ratio, okay, you got stopped out on this one, but imagine a bank of orders that starts here and goes down 10 orders. These are mini lots spread over single case. Buy limit, buy limit, buy limit, buy limit, buy limit, buy limit, maybe 2 pips apart, right? You filled all the way to here. Those are all winners with 1 loser. So gauging this pip risk. Now, if you're going to run, that's about a 20 pip stop. If you're going to run, that's okay. I'm trying to make 100 pips, right? Yeah, that's what I was trying to say. So you're right at the round handle. So your stop is at the last known 100 pips. You just have to put this order out here now. right? But you're looking for this retrace, but next week you have to have orders that start at this wick and here and here and here. And they may never fill. That'll be the first disappointment in trading this way, is that the limits never fill. But if you just press a button and just drop a plethora of these orders, you can see here you definitely want to do that order there. But maybe this is too ridiculous of a target. So always want to, when the market gets quiet, you're going to break out the smaller orders. The ones that just like, okay, I'll buy down here at this low, looking forward. But your profit has to be here. You're stuck with what's going to happen after it comes down. It's going to come back up. If it comes back to fair value, you can't place this order unless you're a trend trader. If you think this is going to continue up, for God's sakes, you got a buy stop here. So what your buy stop look like? And you're like, well, I could get kicked out of that. They could fill me and kick it back and go for a new low. So put a buy stop, put a buy limit. If you're a trend trader, you think you're in continuation, you're going to have some scalps here. Now here's where you'd have the ratio. You'd have to take this and think like this now. I'm going to get a buy. I'm a trend trader. I want to get a buy stop here and my protections here. We're going to continue. Now that's possible, right? I guess this is kind of like you're looking for you wrote a script with a 20 pip stop. Now you're looking for places to launch that, and you're going to go through all the currency pairs. If you see a setup that only has a 50 pip risk, you just put that one drop order in. Now it could be a single drop like this, or you can play, high frequency games where you just have like massive orders on news. When the news came out here, imagine you dropped buy limits that were like, okay, we could just completely go off the rails here. So I'm going to start buying just below this wick. And I'm just going to get in with these insane first orders here. I'm looking to make this much. So what was the best stop? About here. So that was a completely and same thing on the other side, right? The sell banks up there. So you're planning on some chaos, right? And you know the news is coming out, and this thing went up and down many times within this candle. If you go to the next time frame and you zoom out here, so what really happened? If you go to the 5 minute, so was that? I mean, it actually tagged that area there. So on the 5 minute, you would have said, well, gosh, I can see here where I could have buy stops, punching a buy stop key as this is coming in and causing this this crater on the north side. Notice there's not a higher high on this 5 minutes. So as you're coming into this, you've got if you've got a 5 minute trade desk where you can keep hitting a buy stop key and let these stack up for 15 minutes or half an hour just before the news, is a backlash. What if it goes the other way thing. So you didn't have to get in on the limits down here. It's quiet right now, so you'd have buy stops and sell stops. So when you're looking at this so-called noise here, it's telling you plenty. It tells you definitely that you're going sideways. It can't go on forever, and a lot of people have been making money in a very small range here, range trading this noise. The last known top bottom on the 5 minutes here. So you have no choice here but to put in buy stops and maybe buy limits back here. Now here's where you get really tiny risk orders. It's not as broad as this one. This one looks a little ridiculous. You'd have to dial that down. So in the context of how many pips and how long you want to wait to get paid, if you start your risk gauge like this, I just took Fibonacci and changed the numbers. All your killer trades in this are like, oh, I just got in here and this is so such a quiet, even there, buying a retest of this on the 5-minute chart with a stop here, you didn't quite hit your profit. So in the scalping world, if this is your orders and you're like, okay, I'll buy this wick. Anything beyond that wick, that was a good trade. Anything beyond that wick, and so as you drag this forward, we can see you could have got away with this trade even. So what can you get away with, right? That's what everybody wants to know. Here, you're buying this wick. You're not stopped out. As you take this back and forth, you can see that if you wanted to get some, you're like, oh boy, we're going to come back up to here. Never made it. But if the quieter the market gets, the quieter the tighter your orders have to run. So you can't go for the big, like the news orders are going to be, I'll buy 150 pips deep for the next 15 minutes for a 100 pip bounce, because a lot of these things reverse immediately after going up. There's always the backlash, and then now it's calming down. So yeah, I'll come in this Sunday night with orders like this. Okay, I'll start scalping it. I'm game, right? I'll put an order down here. And also here, this internal top inside the bottom is going to be a key price next week. Or probably the next 8 hours, Sunday night when the market opens. People are going to look to there could be a spike into this zone here. You take your trusty rectangle and block off that zone. So all your buy limits are sitting in this thing. That's just an awful color. So that's another problem. These colors. So this area here, and then if you hold down the control key, you can just copy that. So you have an order bank, say here on this wick, and your profits. So you take your order is going to look like. Now this is how you're going to build orders that make sense. You want to buy here for the retrace, and you can have a fixed ratio on everything, actually. This gives you a wider, but everything's designed to make, like, even if it's like this, you don't want to break even orders in, because this is a buy stop. If that's a scalp entry, as soon as you get filled on that, you want to get out. You want to get out here, because they're probably going to kick back. And if it kicks back, you would hit a buy limit button to get in, say, with the same ratios here. And you're just churning through the market. Also, when this goes up, and when it goes up, you may want to lock in a sell limit, a sell stop underneath here. So, because it's probably going to have a little bit of sellers are going to come in up here. And so you'd run the inversion of that. So you're really trading both sides towards the middle. So you take the same, copy this guy, maybe change the color, whip that around, and this is going to be what your sells look like. It's always based upon getting in at the edge. And now, you probably get stopped out if you overhit any key. Too tight a stop for market conditions. When the market's whipping around like a wild beast in here, you definitely want to have a key to go to. Like even here, this first spike up, you figure they're going to retest that. You have a sell limit grid sitting out there. Of course, you know, you have to be sitting there with your you have to go into the news like anything can happen. But after the news is over, you know, here comes the trend traders, and they think the dollar is going to go up against the yen, right? Because they're going to print more money over there. But guess what? You know, the other side of this fundamental story is that, it's already baked into the market. Everybody knows. And, but maybe it isn't a long-term trend. But it's only going to matter to the guy that can ride some giant 500 pip swings in one position. So if you were long the Canadian dollar for the last 5 years, and I did tell people that were investor-minded back then, look at this thing. Are you kidding me? It looked like the dollar-yen. Dollar-yen 5 years ago. The 5 years is a nice, but we could go sideways for the next 10 years on every currency now. There's no plan. The consolidation periods, which is actually what, after you have a big washout of any, like when they unpegged the Swiss franc, we're finally getting into, so the Swiss franc finally recovered and went back up So I just do a Swiss franc after this yen thing, but I didn't want to change off the yen because in the end you can't even tell what market you're looking at. You can't tell what time frame you're looking at, but you always know. You have to just figure in the end how many pips you're trying to risk. So here I'm just going to throw up the pip grid on here of 5 pips. Because the dollar yen, a lot of people let you trade this really tight to the market. And let's see if I got the indicator in here. So I'm going to put about 5 pip grid on here. And you'll just see how ridiculous. So some of these orders, you can't believe how tight the stops are. But if you're babysitting the market here on the 5-minute chart, you can take advantage of these trades. And it really is, the good setups are still going to take an hour in here because it's going to take about, maybe it takes 10 candles, right? 50 minutes to get you a setup. So here is 5 pips on the dotted line. So you can see these are like tight. That's like a 3 pip stop, 5 pip stop on that. And it could be just a sell. Now here's a stop of 5 pips, right? You're selling up there. You can see you're going to need a 10 pip stop, right? So you put a 10 pip stop and you're selling up here. Sell, sell, sell. If you waited for the thing to finally come down here, so you made your money, right? But you have to know how much you're risking. It's always going to be the thing, especially a realistic target. I guess you could always pick the target first. So if you think that's going up, you say, okay, well, I think it's going to go up to here. So you backwards engineer it. You're going to enter on a stop with your target here. It can't kick back after it fills you. In fact, I'm not even going to put, if they come after that, you figure, oh, it's gone, right? I have to change the time frame to bring this. So this is a 5 pip stop. Looking to make 15 pips. But maybe you're just going to buy at the market here because you're like, oh, you know what? There's no way this target, if my target's here, I got to buy at the market with this kind of stop. And I got to wait for that trade. So if you could buy at the market, you're going to pay this price. You buy in the limit, you pay this price. So based on where you're going to get out, if you buy in a limit down here, you're a scalper for the 10 pip winner with a 5 pip stop. If you have a cluster down here, you order here and order here. Same order. Right. And the last stop should not your entry. You should go into free fall at some point where there's no fill. So if you go for a 10 pip window and you set these in like a Fibonacci ratio, so each order has its own, just logarithmic. It's more logarithmic than Fibonacci. You're getting in a staggered thing here. So this trap down here, the market starts to fill each one of these guys, and now they're evaporating in time. It's going to look like this. You keep dropping the same order over and over every 15 minutes. It would say, as you come into Sunday night, you've got all these kind of scalp guys sitting out here. And so the market has got to plunge into that stuff. And if you really wanted to do this, of course, you'd probably want to save this if you went through this hassle of creating a different color for each entry. And you can even make this fatter if it's a bigger order. You see all these overlapping. Now this is your scalp thing. And you can't just trade one position. It's just never going to work. Now, this might be you're like, oh my God, what if I go to sleep and they're going to come down here and tag this? Your profit's got to be there. So you got this order floating, you got this scalp out here. This one you can make, this is your scalping order, and just make it, say, big and black. Just giant. So this is your this is your scalp guy. I don't know what. I guess I didn't change the. I don't know why this have two different colors here, but I have to make this bold. So this say this is your scalp order. So you always know, okay, I'm gonna run scalps here. Like, is that? And I'm not saying that you would manually place these orders like this and do this kind of like new order thing, or even put a buy limit in raw there. I would go for a drop order that's pre-programmed here, of course, because if you're going to drop these manually, you're like, okay, well, this is a scalp. I'll buy back here for a move up to this. So you see I have this guy, and you have a bunch of scalps here just peppered along the way, right? Market plunges into that, retraces, bang, you make money. But is it realistic? Is it too far away from current price? Are you better to put your scalps here at the breakout and have an array of different risk ratios coming out of here? So this guy gets out here, this guy gets out here, and it just comes nice. You're just going with the order flow. On the sell side, you take this and copy it up and then just invert it. And I guess you could change the color of that. Of course, you know, you really don't want to delete all objects after you do all this work. But say this is your, okay, I got a 13 pip stop order. And as this market's climaxing here, you're just keeping the sell at the market button or sell on a stop or sell on a limit. And it just keeps on building a position up there. Same thing here. You're going to get stopped out on some of this, but the sell stop here that didn't get triggered until the market broke this bar, that one fills the sell at the markets and the sell at the limits. Maybe not, but you're like, you know what? It's done, right? This is a 5-minute climax. You're like watching that thing go. This is a 5-pip grid. So you know what your risk ratios are here, and this is all basically day trading stuff. But yeah, just predefine your scalp, maybe your 10 pips here at the market. You buy at the market, and maybe it doesn't even hit this profit. The other thing to do is have a less greedy number. So make this a 3. All right? Is it 2 or 3? Okay, so that's break even. See, that's terrible. So you have to make this at least a 3. I just picked 1, 2, 3 here. So this is double your money. Right, you're risking 10 to make 20. So this should be your worst trade, double your money. Now you take that down to a 5 pip, and now it looks a little more realistic, right? Market breaks out here. What's the chance they can pop it to that? So if you're watching this and you want to get in on stops, you're watching the market unfold here, and you want to get on limits too, you can make the blue ones the limits. So this would be getting used to knowing when to put an order in. So when the market's quiet, you know the kind of the scheme. Stuff's going to be kind of tight. That might kick you up, but you might get that nice blast where you actually double or triple your money. And then it's just a matter of scaling up your size to the point at which you don't feel like you're risking, you know, the comfort level of risk isn't too bad. So here I'm going to make these all the same ratio, double your money. And so double your money on this guy. And so to see, this is actually going to make more money. That's quite a bit. Now, the double your money thing is this is 5 to make 10. And when the market's coming down here, you've already got, say, this order place. They stopped you out. But this one here, you put this on this, you were going to buy that wick. They didn't stop you out. So and you cashed out well in advance of this other order, which is a little bit more of the greedy order. So you've got at least 2 here. And this could all be on a key. So if you can see the exit you still took those profits too. So this was the early guy. So the blue ones would be your, and unfortunately I have to delete all this. And, unfortunately you can't create multiple tools like this. So you're just left with your last ratio that you built. So this is the classic kind of you're going to be tortured if this happens to be nothing but a trap. Your buy stop, your protection stop, and your target. So if you have this at the same time, you drop the exact same ratio of the limit here, and maybe that's it. See what happens. But buying at the market, you could do that too. So you could buy at the market. I guess I wouldn't buy at a stop if I bought at the market here, because you're already kind of going to get the same price. What's the point? Then copy the same ratio down here for the limit. If you think, oh, well, they stopped me out of that, but I'll get in down here, because maybe it's going to be one last tag into this zone here. See the double bottom? They keep retagging that double bottom. So this script would run. It would make money. That's very tight stop, 5 pips. Actually tighter. 5 pips is like that. So this whole time, very quiet, and you're right at the apex of the triangle. So you're expecting some craziness. And of course, on the larger time frame, maybe a buy stop sitting in kind of a classic breakout, which is always the trap, because look at this attempt to break out. Didn't quite make it, but comes all the way back 15 pips. I don't know about you, but I don't want to be down 15 pips. I don't want to be down more than 10 pips at any point in time, unless I really have to. So when you're putting in these wide stops, you're basically, you're going to get into the time frame. There's just to go to the next, just go to the 15. You'll see how ridiculous these orders look. You go to the half hour, you're like, huh? What are you doing? But that's a conceivable target, even on this time frame. Now you go to the 1 hour, and you're like, wow. Of course, the 1 hour, you can see where the buy limits had to be set. So if this is a buy limit order, how big is this got to be? And what is the real risk on these top bottom pivots? Take out your risk tool, hang off, put a 5 pip stop to make 10. You're going to put your buy limits on top of these two tops. They stopped you out. So obviously buy limits on these pivots, you had to be at 10 pips. It's a 5 pip grid. The dotted line is 5 pips. Your buy limit sitting at the top of this, you do not get stopped out. You make your money. Well, you haven't made your money yet, but you haven't got stopped out. 10 pips. You made your money on, had you placed the buy limit or buy stop here for this breakout. Now, that would have been a 10 pip buy stop riding along the candles. Now, this is why people can make a bunch of money in a very short period of time. If you had a trailing buy stop on the top of this as you walk down, 10 pips, stop. So they fill you here. I guess they would have stopped you out. And here's the, I can't tell if it went up before or after there. We open down here, we go up, you hit your buy stop, but it doesn't tell me whether it came kicking back in. So that's going to you have to go to the other time frame to verify that. Let me see if I can go to the 5-minute chart here. Take a look at the what happened back there. So there, no, this is the one I was saying. If you kept coming down here, so see this buy stop was filled, and that you never got stopped out. But if you're looking at the 5-minute as that's happening, and you just keep dropping this order, buy stop, buy stop, buy stop, they finally fill you. It actually goes lower, but when it kicks back, they're filling you. So this order here, this whole bunch of orders here, 10 pips stop to make, but you had, say, 20 orders in here, and only 3 of them got filled. Now you've got a 20 pip stop on this. And you're buying this. You could buy every 5 pips. A 5 pip grid coming in, right? So if you bought this grid, you bought that one, you bought that one, you bought that one, you bought that one. You're in 4K without a stop out. Your best target is this. You totally go through that. That becomes a support later on. This order here, which is your worst or your best fill at the 5 pip handle. So imagine the news is going to come out and you just have like this order bank, and maybe you got stopped out of this one here, right? So you get stopped out of that one. And so every 5 pips you bought one. You get stopped out of this one, this one. Down here now, if you didn't lay them in linear, so you bought here, then you waited to buy here and you bought them in a Fibonacci sequence or logarithmic, where you're actually buying here, 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 here. So this last fill, you're totally out of that trade in less than 5 minutes. Then these other guys are going to ride along. So the one that you bought here, the one that you didn't get clobbered on, that double your money back to this. And this 5 pip grid save you a lot of money because it's forcing you to say, well, what's the trade here? Now here's a 20 pip stop. Yeah, I could go up and retest that. Do you want to get in now, the breakout? You want to buy at the market? So that's the trade. The other thing is, if you did buy at the market here, you really don't want to put, well, it depends on how much money you have. So this is a 20 pip stop. Then if you move this and you say, I'll buy one at the market now, buy one on a limit here, one on a limit here, and one on a limit way down here. So it's not too, and actually if it got in here, this take profit makes sense, right? And if you have an order here at the round, and at the round handle, it makes sense that, yeah, I could probably come up in there. This is when you really want to think beyond the depth of, when you get into, and even with a 20 pip stop, it's totally realistic to look to make 40 pips with this order. This is not impossible. All you have to do is go up 5 more pips, and now you're going to look to make a chunk more money there, a real chunk. So this order, set it at 30 pips. Now you're looking to make 60 pips. If you bought that, every 5 pips you bought here, bought here, bought here. And even here, this last one, look how that works out. Look how it's right up against this. You got to think ahead of all this. And when I just watched a video, and I put it on my tweet thing. This guy finally, somebody traded the news finally, because this whole thing about don't trade the news, don't trade holidays, it's a joke. There's no difference between the data. You can't tell me. I could show you just the market's not, there's no news, and the market just went up 5. I mean, it's crazy, right? Because when it gets to a certain threshold, I remember when the dollar yen finally broke out. I was watching this trade, I'll never forget. And so back here, when the dollar yen, that's on the weekly, it's way back here. So right here, oh my God, no, it's all the way back to, what am I talking about? Let's go monthly here, down here. You know, when this was happening, you could just see, you're like, when this thing started to finally turn around, man, I mean, it was mind-boggling. I try to tell people, do you realize what's about to happen? Like when it was right here, it was at night, and I said, man, if they take that out and they take that out, oh boy. And look where they took it to. God, man, that was just unbelievable. So this giant vapor lock. So it looks just like the 1 hour chart right now. Anyways, that's my my outlook on this thing. I want to thank everybody for watching my ridiculous videos. But yeah, I'm just trying to get like a game plan here. I don't want to risk all that many pips. So the 5 pip grid may look ridiculous, but it gives you a real clue as to, especially if the spread is tight, it's not unreasonable to do low risk trades like that. And look at this. This order buying here every 5 pips. All right, you just keep dropping that bank. And had you dropped that just before the news, those are all winners, right? This one's a loser, almost a loser on that. But you have to know up front, when you click on some massive bank of orders. So let me just post one of these scenarios. This is based on the market plunging. So I had to cut off my buy limit orders. And what I did was I donated the keys to a market order, a buy on the limit, like a shallow buy on the limit. I had to get down to 8 keys. And for the full auto hot key trading on this one account, what it's going to do is the first key you hit is going to come in with a 15-minute order that starts, say, since it's a 15-minute order, it can actually buy every, say, 10 pips. All right, just a crazy order. And maybe there's a stop down here, or maybe there's a soft stop. So like a soft stop would look like you buy here, you buy here, you buy here, these 3. And instead of the stop being hard at here, it's actually, there's a stop here, a stop here, and a stop here. So these are connected to these guys. And these guys are trying to make this much. This one's going to make this much. And this one's going to make this much. So it's a bottomless pit of scenarios as far as being the wick catcher. And the same thing on the top side. When you put in the sell bank up here, and it's either you hand placed for that 5 pip or 10 pip stop hunt there, and they rip it back. If you have a sell grid up in here every 5 pips, say it lasts 4 hours or 1 hour. Of course, when this is happening, if you keep punching the same button, it's actually going to it's going to ride along with the market. So if you think that, oh, you know what, let these other guys fill, and as it's climaxing up into here, that 30 minutes, you're hitting the sell stop key, so you're putting sell stops underneath with ratios that are maybe you're going to risk 8 pips to make 16 pips, right? Not you can adjust on the way back. So you're just going with what's going on. And a half-hour chart is got plenty of double tops, triple tops, bottom wedges, and maybe it is going to go up now, right? I mean, fundamentally, it's supposed to go up because, they're going to print more money than anybody can imagine. But certainly everybody's going to be bailing at the apex on the 100-yard line. And, but yeah, there's plenty of, to me, whenever time I see this setup, I'm like, oh boy, if they ever come down in here, I just can't wait to scalp that for the easy money back up into this. And if they're going to continue, okay, I'll buy a retest. This would be the 4th retest. Like how these markets they're always retesting, and that's another thing. We can kind of know that we're going to see a return to the scene of the crime in these markets. It's always going to be here at the last known low, and this is going to be where they make people think, oh, look, it's going down. So that was the trap. And then, of course, not only did the scalpers make back into this, they also, if they held through and made it back above this, and then the breakout guys come in, they get trapped. Now, buy stops and sell stops just in case we come down here, you want to make a few pips for the retest. Then buy limits. So you're always trading in both directions, to really make use of always in system on the 30-minute chart. It's not too hard to do. You got buy stops pending all night, say here, and maybe the stops are here, but the take profits need to be that, or it's not worth putting a trade in. So if you're trading for really long orders that last, say, 4 hours, 8 hours, make them really small orders because it might kick you out, but there's small limits too. So you have to have the backup plan running. You know that, sure, it may break out and go up, but it's high probability that there'll be some kind of action here where they come near this maybe, come back to here. You want that scalp too. Same thing on the sell side. Maybe your sell limits start here. So there's a bank up here, and your target's going to be the last known top, and the stops say here. So this is a decent ratio area. You got sells up there. You have to have the scalps built in, but your target's down here now. But why not ride it up into that? And especially if you have sell limits up here, my fear is when I put sell limits up here, I'm like, oh God, I better get long on something, because what if I'm wrong and they keep going through that? Like, what if this just goes boom? My God, I want to ride up into that. So I just don't think you can deny there's an opportunity to buy here. At least to here, right? We can all bail here. You made 50 pips. You made 10 of these dotted lines. Maybe you're at a 10K. Maybe you got swept up. Each one was a 1K. Okay, you're making good money. Plus, you're not risking. But, setups on a half hour look different than setups on a 1 hour. And maybe you're not up for these, 10 pip winners and 15 pip winners with a 5 pip stop. That's all you can really get out of these. But at least it's a high probability, quiet trading range. This is just, wow. That takes a long time for that setup. It had to crush through, come back, and you're trying to sell any rally now that it's taken out this big plunge. If you're pulling the buy stop key, or you're buying at the market, every half hour you keep punching the button. I guess that's how you made your money back. Here are the buy limits again, another fill. Here's an example of a 15-minute order. This is a 30-minute chart. You got an order bank like sitting out here like this. Just dumb stuff. Buy limits. Every 5 pips you're running that thing. You just keep dropping that same script. And lo and behold, like here, that's total winner. Total winner. You got 8 pip stops on every order though. Looking to make this 20. That's a good ratio. 8 pips to make 21, right? You could have all your Fibonacci profits. Risk, so I built scripts like that too. Risk 13 pips to make 21. I don't know what that percentage is, but my computer can't draw very fast. Risk 13. So I've written all those drops too. Risk 13 to make 34 pips. So if you feel like you have to have some fib in your game, because it's not linear, it's logarithmic. It's like this market comes smashing down, and it just kind of does one of these guys. So you don't want to buy too much here. You want to buy more densely as it quiets down. Time for a couple buy stops, maybe a couple sell stops, because maybe we're going to spill one more time. So basically your usual situation is if we spike up here on Sunday, you got to trap a sell limits up here, because they're going to get all rambunctious, and then they're going to be like, oh boy. And you're going to trade the ricochet off this top with sell limits that maybe last 4 hours. So just put a whole bank up in there. And you're really going to have to just set it and forget it. If that doesn't happen, you have your buy stops here, so you're long into this. So you can trade it both directions. You're long into it. Because if you, and this is what I don't understand when I watch these Stapleton videos, is like, if you think this is a downtrend, you're going to sell here, well, why not just ride it up in? Like, you don't think they're going to try to do a little stop breakout stuff here? That's a triangle, right? Is this stuff hard to see? You could also go this way. But you definitely want to be pulling the sell trigger, sell stops on the rallies, so they could pick you up and hook you back in. Just like this stuff, if you thought it was going down at this level, you're hitting that sell key, finally pays off. Makes money here, but every time it's down, you hit the buy key. Every time it's down, closed down, you hit the buy key. Then the news came out. It went down lower for a few seconds here, probably. And then here it goes ripping back up. So I think I just crashed my my drawing program here. I guess when you get up above a certain time limit on here. Well, so that's, when you drill down on here, now this is the 30-minute chart. So if you're scalping, you have these buy stops that you're either hand placing or you just keep hitting a button. And here is why the limits make money, because when they do this 10 pip run in here, this is so much money over and over again. Just get in this thing, but always, we all know the 100-yard line is the big deal on this thing. And look at this thing rip through. So even here, buy stops, let's turn over. Amazing. But hell, the guy that sold up here is a genius. Come back to fair value. So return to the scene of the crime. Market wants to run back home. It doesn't want to spend too much time out here because people are like, whoa. But that's just, there's too many pent-up orders. There's too many people with buy stops here to trade this breakout. They got their money. They left the party. These guys, these breakout traders are like, oh boy, they got their money. And not to mention all the reversal orders people have. It's always going to happen. But it's too much fun. Now, Sunday, the yen, I'll have to create a few tight stops for this because you can run tight on this. But I wouldn't be trying to gauge. Now, on the swing trading view, certainly the buyers are coming in here. Yes, that goes without a doubt. And here, your risk would be way, way bigger, right? If you bought, so you can already see if you bought this here, trying to double your money, you had to have a, if you're buying a retest of this double bottom, you got filled, you didn't got stopped out, you're waiting for your profits to come in. If you bought on the wick, this wick, where they took it down, tagged in, you could have run this, take profit. You're still not in profits yet, but you could also have this one here. So this one, you're almost in profits. This one, I think maybe you cashed out. But imagine these tight orders, these insanely tight orders, but on the daily chart. So your entry looks different. Say this is a 50 pip stop. You bought on the breakout, the fake breakout of that last day. That day exists. You put a 25 pip stop on a buy limit of a bear trap or a continuation down trap. You're nearly, I don't know if you're in profits on that. You could even have this one. And you could have had a buy limit on this one. So you're already out of that trade. So scalping off the daily is like about putting your buy limit on the edge of no man's land, right? What are people saying at this point? And look at this. Goes and makes a lower low, does not go any further. You're already out. If you wanted to put a higher risk on that, you made all those pips. You made 200 pips. Now, you can actually have, this would be the one where you have this insane order, where you're risking this much. You got in here and you got out there. I mean, it's 10 times your money. If you bought this one with a 100 pip stop, you got filled on this plunge, you could have had a 50 pip stop, but you had a 100 pip stop. Same ratio. It went well above beyond the call of duty there. Had you stayed in it for 10 days, back to the painfully obvious resistance on the doji resistance, which is right on that bottom there. So yeah, I think that this is kind of easy to trade. There's going to be a controversy here. We could get followed through. It could keep tanking, regardless of what they say about this interest rate thing. Because all you have to do is look at this, and you're like, oh, geez. And a lot of these things just really just start piling on. And now it's about the hole that's formed underneath for all this time. It's been too long. It takes out this. Once it goes after these wicks, if it ever gets through that, there could be a big gust back to here. But I know the bulls want to get on this thing because the fundamental people are like, well, it's going to keep going up. But, trees don't grow to the sky, so we all know how we can all get... I guess when there's mass psychology, people definitely start to repeat, like the idea that the stock market's going to go to hell and stuff. No, we just had to get the weak hands out of some things, maybe. In other words, things are going to go in a different direction. You don't need to have, and the idea of printing money being a problem, it doesn't matter how much you print now, because guess what? Nobody cares. Otherwise, you'd have hyperinflation right now with any logic applied to any system. So why don't you have it, and why will you never have it? Because you have stuff like bitcoins and stuff like that. And so here we are. It could be a serious pullback back to here if you want to wait 3 years to get paid. I'd say buy here in the next 10 years back down here. No, it's crazy. Totally big giant. So I don't know how the fundamentals play on that. Does it just keep marching north once it takes out this? You take this out, then next target's got to be this. Retest of that. That's like 1,000 pips away. So you buy here, and you ride it up, and everybody's going to say, oh, look at you. You're a genius. I think I print more money over there. I don't know if that's going to make this market do anything special. How do you explain this? Will they print money down here? I guess they started printing down here. Oh, well, this is dollar yen. And I'm just living in this little window here, 5 pips. Living inside the 5 pip window.